WhiteOak Capital Mid Cap Fund NFO. Will this NFO help you achieve your financial goals, or will this hurt your financial planning journey? Let us explore. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take a right financial and investment decision. First, let us understand this mid-cap category first, and then let us move on to analyzing this NFO. What is a mid-cap? A mid-cap fund is a fund which invests in equities of mid-cap segment. What is mid-cap segment? In the market, stock market, based on the market capitalization, top 100 companies are designated as large cap stocks. After this 100, next 150, that is 101 to 250, these stocks are designated as mid-cap stocks. These stocks predominantly in the range of 9,000 crores to 30,000 crores capitalization. This WhiteOak Capital Mid-Cap Fund is going to invest in this universe of 101 to 250 capitalization, roughly between 9,000 crore capitalization to 30,000 crore capitalization. Generally, mid-caps has got better return potential and more volatility than large caps. Similarly, they are better stable and have less return potential compared to small cap funds. As we have understood the mid-cap category now, let us understand the basic features, key features of this NFO. This NFO is open till 30th August 2022. The fund managers are Ramesh Mantri, Piyush Baranwal, Tripti Agrawal. Benchmark index is S&P BSE 150 mid-cap index. Minimum investment is just 500 rupees. This fund falls under mid-cap fund category. Exit load is 1% if you are withdrawing before 1 month. After 1 month, there is no exit load and there is no entry load at all. The investment objective of this fund is to generate long-term capital appreciation by investing in equities of mid-cap segment. What is going to be the investment strategy? First, this fund will identify great businesses. What are great businesses and how do they arrive at this is a great business or not? Predominantly, they will give weightage to 3 factors. They are well-managed businesses and scalable businesses, second category, second parameter. Third parameter is they should be in a position to give superior return on capital. These are the 3 parameters based on which they will arrive at whether they are great business or not. If they are great business, then they will apply the second filter, whether that particular stock is available at reasonable valuation. They should not be expensive. They will definitely make sure the particular stock price is available at reasonable discount, not overvalued or just fairly priced. It should be undervalued. This is going to be the investment strategy of WhiteOak Capital Mid-Cap Fund NFO. Now, we have looked at the key features of this particular NFO. Now is the time to analyze the potential merits and demerits of this fund. Potential merits, let us see first. First point, being a mid-cap fund, there is no sectoral restriction. They can invest in mid-cap companies of any sector. So in mid-cap, they can diversify across multiple sectors. So there is no concentration risk here. The fund manager will be able to have wide diversification. Mid-cap segment compared to large cap has got less analyst coverage. Because of that, active stock selection can generate better alpha. That means because there is less analyst coverage, there is less transparency in the analysis. The information is not actually reflecting completely in the price. So if someone has got better information, someone has got better analysis, they will be able to outbeat the benchmark index here. The fund manager will be able to pick and choose the best stocks from the index and also can avoid below average stocks from the index. That way he will be able to generate alpha. This fund can generate higher risk adjusted return comparatively. This fund can provide higher returns over long term inflation beating returns. This fund has got less investment risk compared to small cap funds, because small cap funds during the market correction or fall during bearish trend, they will substantially correct. They'll have a steeper correct compared to mid cap funds. This fund has got more growth opportunities compared to large cap funds. Large cap funds are grown up companies, so the growth rate will be lower compared to the mid cap companies. We have understood the potential merits of this NFO. Now is the time to focus on the potential demerits. As an investor, you have to equally focus on the risk of a fund. One should not be over focused on the return. One should give enough weightage to the risk potential in that fund. This fund is not suitable for conservative or beginner investors. Beginner investors or conservative investors, they should start with large cap funds, broad-based index funds, or even a flexi cap fund. They should not simply start with mid cap fund, because mid cap fund is suitable only for aggressive investors. This fund is not suitable for short-term investors, being an equity fund. If you have only short-term money or you got short-term goals, then you should completely avoid this fund. Being an NFO, this doesn't have a portfolio. Because it is not having a portfolio, we don't know what is the actual stocks in which this fund is investing, what kind of sectoral allocation they have given, whether their investment strategy of buying great businesses at steep discount, are they able to implement? We are not able to make any analysis there. When they have a portfolio, we will be able to analyze. Only after the NFO period is over, they will be investing and doing the real portfolio. That will help us have an idea. Whereas in the existing mid-cap funds, we will be able to do this analysis and select. There is no track record. Being an NFO, no track record. Existing funds have a track record. With the track record, we will know how this fund is managed in the long term, like 7 to 10 years period, how this fund is managed. Different situations, how they are managing during election, how they are managing during market peak, how they are managing during market low, how they are managing pre and post election situations like Russia-Ukraine war, how are they managing? We will be able to do in-depth analysis only if we have a track record of a fund. The ability of the fund manager to beat the index, we have to check. Because there is no portfolio, there is no track record, we are blindly taking risk by investing in this NFO. There is no special advantage when you invest in this NFO. You can very well invest in the existing mid-cap funds. There you can do all the analysis and then take calculated risk. Being an investor, you have to go for calculated risk. You should not take blind risk. When you are taking calculated risk, you are taking less downside risk and you are increasing margin of safety for you. That is very much important as a strategy. During bear market, mid-cap funds will be more volatile compared to large cap. During economic crisis, also mid-cap funds will be more volatile compared to large cap funds. We have done a basic analysis on whether what are the positives, what are the negatives we have done. Now, what is the final takeaway? Do we have to invest in this fund or do we have to avoid this fund? This fund should be only a supplementary holding. Primary holding should be either large cap or flexi cap. If you have either large cap or flexi cap, then as a supplementary holding, you can add a mid cap fund. Only if you have 7 to or more years in your time horizon, you can choose. If you have less time frame, like 3 years, 2 years, you should avoid this fund. If you have decided to invest in mid-cap fund, you have existing mid-cap funds which have good track record for 7 years or 10 years. Then you can choose those funds. because there you will be able to do all the analysis. You can check the portfolio, you can do the analysis, how the fund manager has managed the fund, and what kind of alpha he has generated. When the market went up, how they have captured the upside. When the market went down, how the fund manager has captured the lesser downside. That we have to check up. Right? These things we will be able to do only in the existing fund. Here you are taking blind risk. That blind risk you have to avoid. Before investing in this fund, you have to consult your financial planner, because your financial planner knows your financial journey. Where are you financially with your assets and liabilities, where you are going over a period of time. You have to repay your loans, kids' future, and your retirement. All those things he knows. For your financial milestones, financial goals, and investment objectives, whether this fund is suitable or not, he'll be able to analyze and tell you. Similarly, he'll be able to do a risk profiling on you and tell you, based on your risk appetite and risk taking capacity, this fund is suitable to you or not. Also, you can ask him an overlap ratio, because you are adding this fund, whether this is going to bring overlap to your existing mutual fund and stock portfolio, or this is going to bring unique diversification. Overlap is better or unique diversification is better. He'll be able to analyze and tell you. So please consult your financial planner before deciding to invest or avoid in this fund. Hope you like this 360-degree analysis on this NFO. If you have any questions on this fund or any other investment options, feel free to book a free appointment with our certified financial planner. I have given a link below this video in the description. You can click that link and book your slot with our certified financial planner. We regularly organize insightful investment webinars with eminent investment experts. They share their investment strategies and wealth management techniques which they have learned out of 15-20 years of market experience. You can learn those techniques and strategies and apply to your portfolio immediately. To attend these webinars, complimentary, it's free for you. You can click the link below this video. I have given a different link for webinar participation. You can just click the link and leave your name and email ID. We will book the seat for the next webinar and send you the invite. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.